All right, traders, this is going to be a very important in-depth price action analysis. We're going to be going over the stock market. We're going to be reviewing the SPY, and I'm going to walk you through both sides of the trade, when to be bullish, when to buy the call options, when to be bearish, and when to buy the put options. This is going to be covering the micro price action, how to trade it, both ways. And we're also going to be covering the macro price action, how to trade it both ways. We're going to be going over the key critical levels to look for, what to expect, and how to react if these key levels say it reacts as a support level, or say it starts breaking out. Here's how high the stock's going to go. Say it reacts as a resistance level. Say it starts breaking down. Here's how low the stock's going to go. We're also going to be covering some key stocks, and make sure you stay till the end of this video, because I'm going to be sharing with you a potential opportunity for a short squeeze play. I have identified one stock that has explosive potential, and if this history repeats itself, we can see a very, very nice short squeeze for tomorrow or heading into this week. So I'm going to be giving you and sharing with you the plan for that stock and what to look for towards the end of this video. We're also going to be covering some key stocks such as Coca-Cola, Moderna, AMC. We got a couple good stocks we're going to be covering. So let's get right into this price action analysis. So in terms of the SPY, we did continue to see further red, some further downside. This quickly crashed to $435.24 in the pre-market. And then as you could see, what did I tell you guys to do in terms of put options? I told you guys, focus on buying puts at the previous closing price. If they gap down, wait for them to spike back up once they hit the previous closing price and you see them react as a resistance level. So like right here, SPY had the nice, gap down, and you could see this line right here represents the previous closing price. That's where you're going to want to be looking to buy puts, which was literally the high of day in the morning and literally the high of day towards midday. So two, micro put opportunities where you could have done very, very well in that sense. And the macro is still looking bearish as well. But in terms of the key updates for the SPY, and what I want you to understand is, there's going to be a lot of market events that are going to be moving the market basically every single day this week. So we could easily see a micro spike. The main thing that I want you to understand is, your key level is going to be the closing price, 439.02, and the highs right here at 441. So if you see 439 break out and turn into support, it's going to be micro bullish and it's going to run to 441. If 441 breaks out and turns into support, it's going to be micro bullish, and we will see a nice spike back to about 445 to 445.50 if that does occur, where it starts to break out and turn this key 441 level into support. So for the bears to really remain in control for the micro and for this to not spike back to 445.50, what really needs to happen is you need to see strong resistance come in at 439.02, the closing price. If not, then you need to see strong resistance come in at 441. If that zone can continue to break down and remain a resistance level, we'll be on track for a pullback to 435. Once 435 cracks, we'll be on track for a pullback within some time to $430 to $428. So those are the key critical levels, and that's really what to look for and what to expect and kind of how to react in that sense in terms of the support, the resistance, the price action. In terms of what do I think of today's candlestick? We're trading towards some key support. You have a lot of support right here at 400 and $430. You have a lot of support right here. It did get to 435, so it hasn't hit 430 yet. But in terms of the past 3 days, this is an overreaction. SPY was literally at $457 on Thursday. This was at like $458. And within the past 3 days, it went from 458 all the way to 435. We're talking about a 23-point pullback. That's quite the pullback. So in terms of the micro, and with all these events coming up, it's due for some sort of micro push at this point. Like it just flash crashed to 435 from 458 within the 3 days. Now, in terms of how the candle is looking, typically when SPY, it's almost a bullish pin, not quite, but it did, try to close green. It's only down 0.33% in terms of closing price. So it did try to close green. And, this is a pin, right? And it's towards key support. So with that being said, in terms of how SPY usually reacts when it forms this candlestick towards a key support channel, and when it has this overreaction, this massive sell-off, odds are for the micro, we could see that spike to like 445.50. We can definitely see it happening. I mean, just compare how SPY has reacted when it has a massive sell-off, forms a candlestick like this, a key support. Just kind of go back throughout the chart history and you'll see, what I'm talking about. I'll show you some examples. I mean, a very similar candlestick right here on a pullback, and then you have a micro bounce the next day. A very similar candlestick right here on a pullback, 3-day sell-off, hit some support. Then you have a micro run up. And if you just fairly look throughout the chart history, it's most likely going to have a micro spike. Now, in terms of if that happens, it has to break out and turn 441 into support. If that occurs, then we're going to be on track to 445 to 446, which would be one of the best levels to pick up some SPY puts at a key resistance. Now, say we don't get this micro spike and it's a fake out. For true strength, we need to see a key breakdown of 439. That needs to react as hard resistance. And then, 435 has to crack. Once it cracks, it goes to 430. So that's my thoughts. That's my opinion on it. It does look like for the micro, we are going to see a spike. Now, from this macro perspective, my points of view on this is simply, it's going to be a fake out. Macro puts will continue to print. They'll continue to be safe to hold, in my opinion. I see this going to at least $430, by Friday. So with that being said, I think, if this has a micro spike, it's just going to be a gift to buy more puts for the macro. But yeah, that's kind of what to look for the micro and price action, for the micro and macro price action. Now let's get into this potential short squeeze here. So this is an opportunity where history can potentially repeat itself, and the stock symbol is going to be CAR, C-A-R. So what I'm showing you here is I'm showing you an example of where if history repeats itself, we could see a short squeeze trigger. Obviously not as big as this, but we could potentially see a short squeeze trigger on CAR heading into tomorrow. And I'm going to explain to you why, and I'm going to explain to you the idea behind this, behind this trade, behind this opportunity. So CAR, it had a little gap up here. There's a gap to fill at 171. Ever since it filled that gap right around here, it's been forming very solid support. It's been having a classic gap close reversal, and it's been skyrocketing. It was recently at $203. So with that being said, it's been having a gap close reversal, right? And it's at a key support level with a huge upside squeeze potential. Now, in terms of what triggered this squeeze was the earnings. Now, check this out. Right here on this day, they released earnings, which was, right here. So on November 1st, right? So November 1st, they released earnings. And the next day after earnings is when the stock blasted off and had a massive short squeeze. And with that being said, they had a conference call the next day at 7:30 a.m. And in terms of today, this stock has released earnings. They beat earnings here, and they beat earnings here as well. So they beat earnings again, right? And the stock didn't take off until the next day after the conference call at around a market open. That's when it really started pushing. And they're doing that same thing where they're going to have a conference call this time a little bit later. They're going to have it at 8:30 a.m. tomorrow. They're having a conference call. So I'm going to be listening into that. But the whole idea is if this history repeats itself, we could see a short squeeze. Now, in order for that short squeeze to occur and the key levels to really, that I'm going to be looking for, we could see a little micro pullback in the pre-market or at market open where this dips to 181. So in terms of best dip buying opportunity, there's a gap to fill at 181.25. If it pulls back to 181.25, you see it react to support starting to bounce, pick up some micro calls or buy some shares. Now, in terms of the key squeeze, for this to really squeeze, this needs to break above 203. If you see this break out above 203 early in the morning, this stock should fly. It should have a massive run up. It has a strong history of pushing for new all-time highs, of filling all the gaps that are waiting to fill above. And there is also a gap to fill right here at $305. And then there's another gap to fill right here at $357. And history shows it's known for filling those gaps. It's known for having big moves. And if it were to potentially do it, it could potentially occur, whether it's tomorrow or whether it just takes some time, whether it's more macro, whether it's weeks or months. But over time, those should fill. It's just we're sitting at this key support level. They had phenomenal earnings. You know, they've exceeded expectations. They had great earnings. And in terms of the setup, it's at that key support level. It's reacting the same way. Everything looks the same. Everything looks very, very similar. So just to take you back in time, we're going to go back here in time, and I'm going to show you, this is something that no one really does. They just look at the daily chart. I actually go back to the candles to get an idea of how well history can repeat itself. So this is what I want you to look for tomorrow. So as you can see right here, it's doing a similar move. So earnings was released right here. This is where earnings was released. You could see before earnings, it had a little pullback. Then it started to spike a little bit. It went from like 167 to 185. So somewhat similar move to today. And then you could see it pulled back. So once they had the conference call, it kind of pulled back right around that time, bottomed out, hit that previous closing price. So keep an eye on that 182, that 181 key level. And then as soon as the market opened, and this is what I'm going to be looking for, I'm going to be looking for the dip buying opportunity. But mainly what I'm interested in, not really the dip buying opportunity. I'm mainly interested more in this whole breakout opportunity. See how as soon as this indicator turns teal blue, it has a massive short squeeze and it breaks out. You see that massive squeeze, and then see how when it turns dark blue, look at this. This is the first time it turns dark blue. It has a massive sell off once it turns dark blue, right? So I'm going to be paying close attention to the whole squeeze indicator tomorrow on a car stock to see if we can get, some sort of move where it has a short squeeze. I'm not expecting it to run to 300 or 400 to fill these gaps tomorrow. But if we can see a break above $200 and this bottoms out nicely at 181 for that gap close reversal, we should see some strong continuation in a run to potentially 230 to 245 to 250. And I'm not the only one that is seeing this and thinking this way, because I was looking at the option chain, and if you take a look here, people are already playing the short-term micro call options here, the February 18th. Take a look at the volume on the February 18th in terms of these call options. So let's take a look here. You can see, look at this. People are playing the $800 call strike, 383 on the volume. And then you got heavy volume right here, 2,500 on the volume for the $500 strike, right? And if you scroll up, you could see you got some nice volume, 2,200 volume right here on the $300 strike. So a lot of people are playing those far out of the monies, looking for some sort of crazy expected move. So we'll see. That's going to be, my top watch for a potential short squeeze play tomorrow. You can also see on the daily, it's been triggering as well for a potential squeeze. But yeah, I'll be looking for a similar move in terms of if history repeats itself. Now let's go over some stocks. So AMC is starting to pull back like I had expected to. My call options are currently up a little bit over 12%. It's a little bit detached from the market right now. It's following it a little bit in the sense. The key for this to really continue to pull back and for this to really sell off is once we can get this $18 level to turn into resistance, and once we can get 17.75 to crack and turn resistance, that's when we'll see the nice pullback to 16.50 when that occurs. If not, it breaks out and turns into support, then we're going to be on track for a pushback to about $18.50. So that's my thoughts on that. I'm still very short biased for AMC for the overall week. I think we have more downside coming. So yeah, those puts should continue to do well. Let's see. So Ford still bearish. I think by end of March, I think by mid-March, we'll be at this gap fill at $16, which would be the best price to buy the calls. You guys remember how I told you Tesla can have that micro gap close reversal, that micro spike once it fills this gap at $846? Well, in the pre-market, that gap ended up filling. Ever since it filled that gap, it's been having a very nice move, and you could have bought shares in the pre-market like right around here in the 850s. It turns it into support right here. It's been blasting off ever since. Once it had the break above the previous closing price, it took off and it shot up to 897. So that was a classic gap close reversal where, again, Tesla has that micro gap close reversal, filled it at 846, shot back up and ripped to the $900. That was all explained in yesterday's video, and you could have done pre-market shares on that. In terms of Robinhood is still looking bearish within some time. That's going to continue to sell off. Facebook, don't have much of an opinion on that right now. Snapchat is beginning to really look bearish. You have a triple top at 41.80. If this can take out 39.60, we'll start to see a nice pullback to 37.40. In terms of, let's see. Yeah, I mean, I'm not really too interested in much stocks right now. You know, car is going to be my main interest for tomorrow, along with SPY, AMC. That's like main interest. Still in on those. Coca-Cola formed a very bullish candlestick on the daily. So it looks like for the micro, we're going to see a little micro run to 61.50 on this, due to that bullish candle. Let's see. SoFi, that bearish play is working out. That should continue to go lower within some time. But yeah, I mean that's mainly what I'm focused on is the SPY, AMC, and car. Those are like the main ones I'm interested in. In terms of Moderna, mRNA, this is a key breakdown play coming up. You got key support right here on mRNA. Your key support is going to be at $138.20. If that reacts as strong support, within some time we'll see a gap fill to 161, which would be one of the best prices to buy puts. If this cracks, this $138 level, it cracks, it turns it into resistance, it should have a flash crash and it should quickly pull back. Let me get an idea here on how low it can go. There would be a gap to fill right here at 139.40, so that already kind of filled. It could have a flash crash to about $130. You're looking at an 8 to 10 point flash crash. So keep that in mind on Moderna. There's some gaps to fill in the low 130s. Once that cracks the level, it's going to go down to fill those gaps for the key breakdown. Coles is looking very, very bearish. Within some time, this is going to continue to go lower. Those macro puts that I have should continue to print on that. In terms of, let's double check here. So yeah, I mean, that's really going to cover it. That's mainly what I'm seeing right now. So there's plenty of, we had the nice all-time low breakdown on Affirm. But yeah, I mean, with that being said, that's going to be my main focus. Car stock, AMC stock, SPY, and we'll see if something else, new comes around for tomorrow. But yeah, guys, those are going to be the main plays. I was looking at some of your comments, some of your posts. Some of you guys did very, very well on SPY puts and a couple other stocks with puts. So congrats for those of you who played them. And yeah, that's really going to be wrapping up this whole lesson here. So if you enjoyed this video, make sure you liked and subscribe. If you do want to be a part of Trader Society, I trade live every single day at market open. If you do want to be a part of that group, it's the first link down below in the description. Just to give you some background in terms of what's included, you get to watch me trade live every single day at market open. You get the daily stock analysis, the daily watch list. You also get the one-on-one direct messaging access within the chat room, the private group, the chat room. And there's a lot more to it. So if you want to check it out, it's going to be the first link down below in the description. I will see you guys tomorrow live at Market Open for those of you within Trader Society. Thank you so much for, choosing your time to invest into yourself and into your education. And I'm looking forward to continuing to work with you guys. And I will see you tomorrow live at Market Open.